Goldman Sachs, of course. It's nice to see you, sir.
Thank you. Thanks for having me, Andrew.
We're all
and
trying.
Becky, we miss you, Becky.
We miss Becky. We miss Joe. We're all trying to get the pulse of what's really happening here. And I know you've been here since Monday. I was saying before you came on, you've been part of the inaugural weekend. I know you weren't at the inauguration, but there's been a whole bunch of CEOs, including Dara Khosrowshahi, who was just here, who did we call it the double dip. They've gone to both. What do you make of just the reaction to what's happening in the U.S. and how that's going to impact the economy?
Sure. Well, first of all, the U.S. economy is in pretty good shape, Andrew, as we head into this new administration. But I think the thing that I'm encouraged about, and as I talk to clients, I'm finding clients really encouraged about, it seems like, and this is true in the U.S., it's true with the new administration, but I'm also hearing it in my meetings here as I'm talking to clients from Europe, et cetera, people are focused on growth. And if we can run a more growth-oriented agenda, if we can do some things that free up capital investment, especially private sector investment,
right,
that is a good path for us. And I think people are optimistic, and it's not going to be a smooth, perfect path, but people are optimistic that we are going to run a more growth-prone agenda. We're going to free up some investment. We're going to unlock the private sector a little bit more, and that's got to be constructive. And that is the best path for us at this point.
Do you think that's already built into the equities market? Because we are at historic highs on a relative PE basis when you start to think about, a new term of a new president.
I think it's hard to dispute the fact that equity multiples are high. And you've asked me these kinds of questions before when I've been on with you, and I've always said I'm a very bad predictor of equity markets up and down. But I think the equity markets exhibit a sense of optimism at the moment, but they also exhibit a sense of optimism around growth in technology, and particular, this AI wave. And of course, it's not going to be a straight line, but some of the technology we're seeing, the opportunities for that technology to improve productivity very, very meaningfully, I think are really extraordinary. And I think that optimism's in the market too. So yes, there's a little bit of a change in policy that's creating optimism and has put us in a little bit more of a risk-on, mode for assets. That's affecting equity multiples. But I also think you're seeing real changes in technology that are advancing us economically in ways that I think have the potential to be quite positive.
How do you quantify the sort of new regulatory landscape in terms of what that can do to multiples and things like that? If all of a sudden there's going to be a wave of transactions, and I know you've talked about that prospect, or a wave of IPOs.
Yeah. So look, I think one of the things that you have to recognize, the market runs ahead. The market looks forward. And so we are coming off of a very, very tough regulatory environment across all industries. One of the things that was interesting to me last spring was at an event with a very broad group of CEOs. And when asked broadly across all industries, what's the number one thing affecting the strategic execution of your business, 67% said regulatory kind of program. So the change in that is something that I think can be quite constructive, but it's going to take time. People are policy. You have to get people in place, and it's going to take time. How do you quantify it? I think it's hard to quantify, but it can have a real impact on growth. And by real impact, 0.5 percentage point of growth, if we can just unlock a little and have a little bit more M&A activity, a little bit more of the opening up of the capital markets, I think that can be quite constructive.
We had Bill Ford here from General Atlantic, and we were talking about the prospect for exits, both in the IPO market, but also all of a sudden strategic buyers that might actually be able to buy some of these assets that are owned by private equity that have been sort of traded among private equity firms for the last decade, but with no real exit out. Are you already hearing about deals like that?
There's no question that the private equity venture community has been on the sidelines for the last couple of years. And I would say from what we see inside the organization, the activity levels, kind of the lineup of things that people want to bring to market should allow us to see a meaningfully increased pace of deal activity in 2025. I've talked a lot, Andrew, about the fact that equity volumes and IPO volumes in particular have won well below 10-year averages. My expectation in 2025, we'll get back to 10-year averages and do better.
Tariffs. We were also talking to Jamie Dimon. Mary Erdos was talking about they've created a war room, apparently, at JP Morgan to look at all of these executive orders that Trump is putting out to try to assess what they mean for clients, tariffs, of course, being one of them. How do you even advise a multinational business today about the tariff issue?
So it's complex, and it depends, where they sit and where they are. And I think one of the things that we all have to recognize is that this is going to be fluid. And so I think for a lot of CEOs that we're talking to today, they've been thinking about these things for a number of years. This is not new, on the agenda of policy discussion. The question is how quickly and where. And, I think it's uncertain. I know there's a lot of talk. And
you're an investment banker and a negotiator. Trump is a negotiator.
Absolutely.
You usually have a good sense of just how these negotiations go. What do you think this turns into really?
I think it turns into a rebalancing of certain trade agreements over time. And I think that rebalancing can be constructive for U.S. growth if it's handled right. And the question is how far, how quickly, how thoughtfully. And there's no question. Look, he said it blatantly, and others in the administration have said it blatantly. Some of this is negotiating tactics for other things other than simply trade. And some of it is trade balance. And, I think that's important.
Right.
I think used appropriately, it can be constructive. I think the dollar is super important in the context of kind of the strength of the U.S. and U.S. preeminence. And so I think this is something that's going to unfold not just in the next couple of weeks. This is going to unfold over the course of the year.
Right. And
we have to watch it closely.
Becky's got a question for you.
Hey, David, yesterday we had Peter Navarro on and had a long conversation about these tariffs. And I think a lot of business leaders look at this and think this is the art of the negotiation to a certain extent. But if you talk to Peter Navarro or if you talk to Stan Druckenmiller, who we spoke with earlier in the week, they are counting on some revenue potentially coming out of this. And those revenues are going to be pay-fors to not only extend the 2017 tax cuts, but perhaps enhance and offer other things. President Trump made a number of promises on the campaign trail about no taxes for tips, any number of other areas that they would like to pare back the taxes that Americans are paying, but you got to pay for it some way. We've been watching higher yields in the credit markets and treasuries, and I just wonder how much of it you think is the higher yields that we're watching sticky inflation, how much of it is concerns about our debt and deficits and where all of this revenue is going to come from, what you're anticipating this year from credit markets and from the buyers of those treasuries.
Yeah, so I think, Becky, look, I think you're asking the right question. The answer is, the move in treasuries over the course of the last few weeks is a combination of all these things. But I do think it's something to watch very, very carefully. And I do think the key message in all this is growth. You can talk about pay-fors, but at the end of the day, the way we get out of the situation we're in with respect to the debt, the growth in the debt, has got to be driven through growth. And so you've got to get the balance right on this. And it's a complicated cocktail, for lack of a better term, of a range of policy initiatives. And I think one of the things, everybody wants the answer right now. I understand that, but whether it's immigration policy, whether it's tax policy, whether it's trade policy, whether it's energy policy, all of these are evolving and developing, and they'll all have an impact on the balance of where rates go, et cetera. On rates with a longer-term view, Becky, I'd just say it's hard for me. I'm in the camp that some are in, that it's hard, given the level of our Treasury stack, to see longer rates going lower, in the near term. I think the pressure is going to be upward as we move through the end of the decade.
And is that problematic, or is this a situation where if we have enough deregulation that's put in place, if we have enough cutting of bureaucracy, if we have enough embracing of innovation, that offsets those potential higher treasuries?
It can absolutely offset that. You could have a very constructive environment. Look, for most of my business career, the 10-year treasury was not,
Right.
470. The 10-year treasury was meaningfully higher. You can certainly have a constructive economy and growth with higher treasuries. It's all a balance of where inflation is, where growth is. And, these are things that are uncertain at the moment and things that we and others are watching very carefully.
We've been talking with a number of your peers about crypto under Trump and just how it may change what you laugh, but for a long time we talked about it and there was nothing for a bank like Goldman Sachs necessarily to do about it. But I wonder, in an environment where Trump is now talking about a strategic Bitcoin reserve, whether your sort of thought process around how to deal with crypto is going to fundamentally change.
Well, first, and Andrew, we've had this conversation a number of times. The underlying technology is something we spend a lot of time on.
Right.
It's something that we're utilizing and testing to create less friction in the financial system. Super important. At the moment, from a regulatory perspective, we can't own, we can't principal,
Right.
we can't be involved with Bitcoin.
But
Bitcoin,
you may be able to soon.
if the world changed, you and I could have a discussion about it.
But you want it to change. Is that something that your lobbyists in Washington would be advocating for?
I don't have a lot to say about, a speculation as to a significant change like that. At the end of the day, I'm a big believer in the U.S. dollar. I think the U.S. dollar is super important. Bitcoin's a speculative asset, an interesting speculative asset. I don't think there's a lot more to say.
Let me ask you about this, though. In an America First world, and we were talking to Brian Armstrong a little bit about this the other day, is Bitcoin a threat to the U.S. dollar? Meaning, if the United States really...
I do not think Bitcoin is a threat to the U.S. dollar.
Do you see what I'm saying? Meaning if
there are others that might see... I don't see Bitcoin as a threat to the U.S. dollar.
Let me ask you a different question, because there's some news in the Wall Street Journal today about DEI, a topic, and ESG, a topic that we talk a lot about in Davos, or at least historically did, and maybe we're not going to anymore. But a number of shareholder activists who are targeting now Goldman Sachs and JP Morgan over the issue of DEI. Obviously, a whole number of companies have abandoned a lot of their DEI programs. What do you think?
So I saw the article this morning. I know there are some people putting shareholder proposals into a bunch of financial institutions. I got briefly posted on it, but to be honest, I haven't looked at the specific proposals in detail, so I can't really comment on the specific proposals. More broadly, we've always looked at these issues, Andrew, and you and I have talked about this before, through the eyes of our clients. We're advising our clients think about these things. They think about decarbonization. They think about climate transition. They think about their businesses, how they find talent, the diversity of the talent they find all over the world. We operate a big global business and we serve global clients everywhere. We think about these issues through the lens of how do we help our clients navigate these things, and we continue to stay focused on talking to our clients and doing the things we've always done.
But in a world where Robbie Starbuck is calling up these companies on a Friday, and companies are announcing that they are abandoning their plans on a Monday, and I imagine you're advising some of these companies on how to think about some of these things. What are you telling them?
Well, I think the construct is companies have to do what's right for them to successfully run their business, operate, compete in the markets they operate in. I think one of the things that's interesting on this topic here is the legal construct's changing a little bit, and especially when you get into states and different jurisdictions. And so that's something that we continue to evaluate, and I think other companies continue to evaluate.
Finally, we had a segment just before you got on about TikTok, and we've been talking about China and the relationship with China. Obviously, Goldman's been trying to do business in China for a very, very long time. I'm curious about what you make of TikTok as a chess piece in all of this, whether it's a national security threat or not. I don't know if you're going to be ultimately involved in negotiating or helping to advise on a potential transaction.
Well, I don't have anything specific. I don't have anything specific to say about TikTok. On China broadly, as you highlight, we've had a business there for a long time. We continue to operate there and serve our clients there. Most of our business there at this time is around advising our clients who run big global multinational companies in China. I do think it's very, very important for the United States and China to get their bilateral relationship back to a better place. And I'm hopeful that the president, in his approach and his dialogue will be able to drive us to a place where that bilateral relationship is improved. But at the moment, I would say there are a number of issues there that have to be worked through. TikTok is one small one in the overall scope of the bilateral relationship that has to be worked through.
David Solomon, thank you for coming in.
Oh, thank you for having me. Always good to see you, Andrew. Thank you.
Becky, back to you.
Okay, thanks, Andrew. When we come back, another big interview live from Davos. We'll hear from Coca-Cola CEO James Quincy and a programming